people, welcome back. So now we'll be revising cash flow statement. Cash flow statement is accounting treatment is given in accounting standard 3. So cash flow statement is simply a statement which captures cash coming in and cash going out of the organization. Simply an inflow and outflow of cash is tracked, and that tracking is done by a statement called cash flow statement. So don't be misled by the term cash. Cash here refers to both cash in hand as well as cash at bank. And we don't track just cash coming in and cash going out. We track cash and cash equivalents coming in, cash and cash equivalents going out. Cash for this purpose both includes cash in hand as well as cash at bank. Next, we need to know what is cash equivalent. So name itself is saying cash equivalent. Cash equivalent means it is not cash, but it is as equal to cash, or it is as good as cash. So what does cash equivalent mean is simply, sir, it's investment. Short-term investments, we usually call it as cash equivalents. So, but this, sir, every short-term investment is cash equivalent? No. If you want to call it as cash equivalent, it has ideally 3 features. 1, the maturity, the total holding period of this investment should not exceed 3 months. From the day you buy, within 3 months, you should sell it off. Total period of holding should not be more than 3 months. So that is 1 of that investment. And 2, it should be readily convertible into known amounts of cash. Meaning by sell the investment, how much money you will get, you should be able to tell it with reasonable certainty. And it should have insignificant value change risk. Meaning that investment value should not fluctuate too much. There should be only a moderate or limited amount of fluctuation. If it is significantly varying, like in case of equity shares, if you buy any company equity shares, its value may increase by 20% tomorrow. It may reduce also, correct? So that means value change risk is low or high. High. So equity shares, if you purchase some other company equity shares as an investment, that is not considered usually as a cash equivalent because it has high value change risk. For you to call it as cash equivalent, 1, its maturity should be less than 3 months. It should have insignificant value change risk. And 2, it should be readily convertible into known amounts of cash. So if all of them are satisfied, you can call it as cash equivalent. And what does cash flow statement basically track, sir? Inflows and outflows of both cash as well as cash equivalent. This particular inflow and outflow, no, we put it under 3 buckets or 3 categories. Those 3 categories are operating cash flow, investing cash flow, financing wala cash flow. Some of the examples of operating cash flow will be, name itself is saying operating cash flow, something which is related to our day-to-day operations, like cash purchases, cash paid to creditor, cash sales, cash received from debtors, some employee cost paid, some rent paid, some electricity paid. All these are part of your operations. So any cash paid towards this will come under operating cash flow wala header. Okay. So these are the common examples of operating cash flow. Next is investing cash flow. Investing cash flow means think where and all can you invest. First, within the organization, where and all can you invest? Purchasing the property, plant and equipment. So if you purchase any PP, it's an investing activity ka cash flow. If you can purchase it, you can also sell it. So sale of PPE also is an investing activity. Purchase of intangible asset, sale of intangible asset is an example of investing cash flow. Next, you can invest elsewhere outside the organization. Where you can invest, you can buy some other company ka equity shares or some other company ka debentures. So investment purchased is an investing activity. If you can purchase investment, you can also sell those investment. So sale of investment also is an investing activity. So if you purchase some other company ka investment, what will you get in return? Dividend. So dividend is received because you made an investment. If investment purchased is investing activity, the dividend received on those investment is also investing activity. So dividend received on investment is an investing activity. Then if you purchase some other company ka debentures, then what will you get? Interest. So interest received also is an investing activity. So these are some of the examples. Then financing activity ka some of the examples is think where and all can you raise the finance, or how and all can a company raise finance? 1, by issuing equity shares. So if you can issue equity shares, you can also buy back equity shares. Both are financing activity. Then issue of preference shares. If you can issue preference shares, you can also redeem or cancel preference shares. That is also financing activity. You can issue debentures and also you can cancel or redeem debentures. That is also financing activity. Or you can take a bank loan, normal bank loan taken and bank loan repaid. Also financing activity. On loan, debentures and all, what do you pay? Interest. So since loan is a financing activity, interest paid on that loan is also financing activity. On equity shares, preference shares, what does the company pay? Dividend. So since equity shares and preference shares are a source of finance, dividend paid on those shares are also a dividend activity. So these are some of the common examples that you find in the problem with respect to those components. Yes, sir. Okay. Next, sir, your operating cash flow. Operating cash flow can be found out under two methods. One is the direct method, another one is the indirect method. Only to find operating cash flow, there are two methods. For investing and finance, there is no method. Direct method means like cash received from debtors, cash sale. Those sort of information will be directly given to you in the question, or they will give you some components through which you can find out these things. So if these sort of information, if you can find out directly, then we use direct method. If cash received from debtors, cash paid to creditor, cash sale, employee expense paid, all these information are missing, then we use another method called, or popular method called, indirect method. Under indirect method, what do you do is we use profit as a base, and from profit we try to find operating cash flow. We take profit as a base and try to find operating cash flow. So are we getting this operating cash flow directly or through some jugaad? We're doing all this harkates or extra affairs, right? From profit we are getting operating cash flow. Hence the method name is indirect method. Okay. So the main thing that you have to know in cash flow statement is, sir, which profit have they given to you in the question? So profit order I've spelled out over here. So from PBIT, if you deduct interest, you're going to get PBT, profit before tax. From that, if you deduct tax, you're going to get profit after tax. Then starts all your appropriations like transfer to reserve, CRR created, etc., or equity dividend, preference dividend paid, etc. After doing all this appropriation, whatever balance in P&L remains, that only you will show it in balance sheet. That only we used to refer in our class purposes, profit after all the adjustments. Okay. So in some problems they will give you profit after all the adjustments. Sometimes they will give you profit after tax. Some problems they will give you profit before tax. So the first thing that you have to do in cash flow statement is find out what sort of profit is given to you in the question. Accordingly, adjustments will vary. If you try to mug up cash flow statement can be a real problem for you. But if you approach it logically, question only has 90% of the solution. Hardly anything is there. Some information will be missing where you have to put up ledger and figure it out. So cash flow statement, according to me, is very easy, provided you approach in a very logical way. The moment you say, I will mug up this comes means plus, that comes means minus. If you start approaching like that, cash flow statement can be a nightmare. Okay. So don't go into that mug up zone over here. This need not be mugged up. Okay. So first identify what sort of profit is given to you in the question. We'll also do the question. First, I told you, first we will revise everything through the chart book. Then we'll apply it in a couple of problems. Based on the time, we'll decide how many problems we can take it up. Done. So first is this. Then sir, under indirect method, how do you get operating cash flow? By using profit as a base. Suppose they give you profit after all the adjustments. Suppose they give you profit after all adjustment. Sir, same thing. Let's say profit after all the adjustment is 10 lakh. Same thing, can we make it as operating cash flow? Profit after all adjustment itself, can we take it as operating cash flow? No. Why, sir? Sir, this is profit. Profit means it will include every expense. Whether it is cash expense or non-cash expense, you will transfer it to P&L. Whether it is operating expense or non-operating expense, everything will be transferred to P&L. Whether it is operating income or non-operating income, everything will be transferred to P&L. So profit after all adjustment itself, you can't treat it as operating cash flow. You need to do certain adjustments. And adjustments I've called out over here. So suppose they give you profit after all the adjustments. Don't do this adjustment blindly. Don't do this plus minus blindly. You can do this plus minus only if they give you what profit in the problem? Profit after all the adjustments. If they give you some other profit, then means all whatever you're doing here addition may be ignored. So I'm just stating. So that's the reason in cash flow statement, finding what sort of profit is given in the question is very, very important. Suppose they give you profit after all the adjustment. So first adjustment that you need to do is if there is any non-cash expenditure, you need to add. If there is a non-cash expenditure, you need to add. Now think. One of the examples of non-cash expenditure is depreciation or amortization. Depreciation is on property, plant and equipment. Amortization is on intangible asset. Now is depreciation an expense? Yes. Due to that expense, what will happen to your profit? Profit will reduce. Sir, under indirect method, we want profit or we want operating cash flow? We want operating cash flow. But how are we getting operating cash flow? From profit. So due to depreciation, your P&L balance has reduced. From P&L only we are getting operating cash flow, no? So if P&L balance is reduced means operating cash flow also indirectly has reduced. Correct? Due to what? Depreciation. But did any cash go out because of depreciation? I am depreciated by asset by 10 lakh rupees or 1 lakh rupees. Did my cash go out of 1 lakh rupees or it's a non-cash expenditure? Depreciation, amortization and all is just a bookish expenditure. It's a non-cash in nature. There will be no cash outflow or cash inflow due to depreciation. But due to depreciation, P&L has reduced. So because of this, operating cash flow has also reduced. But cash did not go out. Hence, what do we do? To restore, we add back. So if there is any non-cash expenditures, we need to add back. That's the first adjustment we shall do. So some of the examples of non-cash, all this I've seen the problems I've brought in the adjustments. So some of the common examples of non-cash expenditure is depreciation, amortization, transfer to reserve, preliminary expense written off, miscellaneous expenditure written off, discount on issue of debentures. Shares cannot be issued at discount, but debentures can be issued at discount. So all this, if it is there, means it's a non-cash expenditure. Due to this, your P&L has reduced. So due to P&L reduction, operating cash flow also has reduced. But cash has not gone out. But cash flow is reduced. Hence, what do we do? Add back. That's the first adjustment for this. Okay. All right. Next is non-operating expense if you have. Sir, you don't have to call out the category. I've called out the category that's non-cash expense only for your reference. In examination, simply do plus minus. You don't have to tell whether it is non-cash expense, non-operating expense and all. You don't have to identify. Simply do plus minus. That is good enough. So next is if you have any non-operating expenditure, we need to add back. Some of the examples of non-operating expenditure could be interest. So now, interest paid. Sir, interest paid, interest you will pay on what? Loan taken or debenture issued. Yes, on loan taken or debenture issued, you will pay interest. Interest paid is what activity? Financing activity. But interest is an expense. Will expense be transferred to P&L? Yes. So this interest expense has gone to P&L. Due to this interest expense, what has happened to P&L? P&L balance has reduced. Any expense will reduce the profit. Correct? So profit is reduced means from profit only we are getting operating cash flow. So since P&L is reduced, your operating cash flow is also reduced. Okay, due to interest paid, your operating cash flow has got reduced. But interest paid is operating activity or financing activity? It's a financing activity. But operating cash flow is reduced. Hence what to do? Add. Since P&L got reduced, operating cash flow also is reduced. But it's a non-operating expenditure. Hence we add back. Same goes for your loss on sale of asset. So you have sold an asset at a loss. So sale of asset is what activity? Investing activity. So if you have sold an asset at a loss means loss, where will you transfer it to? P&L. Sir, loss if you transfer it to P&L, what will happen to your P&L balance? P&L balance will reduce. Sir, if P&L balance is reduced means from P&L only we are getting operating cash flow. So P&L balance is reduced means operating cash flow is also reduced. But sale of asset is operating activity or investing activity? Investing activity. But due to this transaction, operating cash flow has unnecessarily got reduced. Hence, what do we need to do? Add back. So like that. Okay. Same thing goes for proposed dividend also. Because profit after all the adjustment means dividend is also adjusted. But just to give you a context, suppose you take, if they're given profit before tax in the problem. Suppose they give you profit before tax in the problem. Then should we have to do anything for dividend, sir? No. Because profit after tax means what, sir? Here, profit before tax means is dividend already deducted or yet to be deducted? So profit before tax means dividend is not yet deducted. If it is not yet deducted means has profit reduced? No. So in that case, will you add it or ignore? Ignore. So only if they give you profit after all adjustment, then dividend is already deducted. Dividend is already deducted. Okay, so due to this dividend adjustment, P&L balance has reduced. If P&L balance is reduced means operating cash flow is also reduced. But dividend paid is operating activity or financing activity? It's financing activity. But unnecessarily your operating cash flow is reduced. Hence what do we do? Add back. So here we'll add back only because it is profit after all the adjustments. Suppose if you had chosen profit before tax or profit after tax, dividend adjustment simply we will ignore because it is not yet deducted, like that. So that's a logical way. Fine enough? Okay. Next, non-operating income. If you have any non-operating income means you need to reduce. One of the example of non-operating income means interest received or a dividend received. So interest received is an income. So where will you transfer this income to? P&L account. Where will you usually transfer income and expense to? P&L. So interest received is an income. Income will be transferred to P&L. What is the impact this interest will have on your P&L? Interest received. Due to interest received, what will happen to your P&L balance? Due to this interest income, P&L balance will increase because it's an income. One income, if you transfer it to P&L means P&L balance will increase. If P&L balance increases means indirectly your operating cash flow also will increase, because from P&L only we are getting operating cash flow. So due to this adjustment, your operating cash flow has increased. But interest received is what activity? You will receive interest on your investment. You will receive dividend on your investment. So this is your operating activity or investing activity. Interest received or dividend received is an investing activity, but your operating cash flow is unnecessarily increased. Hence, to restore, what do? Minus. So if you have any non-operating income like interest received, dividend received, profit on sale of assets and all, you need to reduce it. Okay, this is one. Then we also give the effect to working capital changes. Working capital changes means we just check what's current assets and current liability. Some of the examples of current assets could be your debtor, bill receivable, etc., etc. So compare it, current assets ka opening balance with the closing balance. Compare opening balance and closing balance, you compare and you'll find out whether the current assets have increased or whether it has reduced. By comparing opening and closing balance, we get the increase amount or decrease amount. Increase in current assets means minus. Decrease in current assets means plus. Increase in current liability means a plus. Decrease in current liability means minus. Sometimes they'll directly give you working capital. Instead of current assets and current liability, directly they'll give you working capital. Increase in working capital means, sir, how do you get working capital? Working capital is nothing but current assets minus current liability. If working capital is increased means indirectly they're telling current assets are also has increased. Because this increase in working capital can only happen if current asset has increased. There's another scenario also, leave that out. So if current asset has increased means what do? Minus. So increase in working capital we will minus. Decrease in working capital we will plus. The logic of each plus minus I've given you with illustration. Okay. Now we'll not waste the time in going into that logic. Not the right time to discuss that. Okay, sir. All right. Sir, I'm getting confused between this plus minus, sir. What to do, sir? I did not attend your regular class, sir. Now tell me the logic, sir. I'll not tell you the logic, but I'll tell you a shortcut. One is, we'll take this debtor. Let's say debtor ka opening balance is 1 lakh. Closing balance has become 70,000. Opening balance of debtor 1 lakh. Closing balance has become 70,000. So compared to opening balance, closing balance is reduced. No. That means what is this now? Debtor balance has reduced. So decrease in current assets means plus. Decrease in current assets means plus. Logically, you think, sir, how 1 lakh became 70,000? How 1 lakh became 70,000? 30,000 rupees, the cash has been received from debtor. So when you're preparing cash flow statement is not an account, it is a statement. Cash coming in, we show it as a positive number. Cash going out, we show it as a negative number. Here, from 1 lakh, it has become 70,000 means 30,000 cash we have received from debtor. Cash received means it's an outflow or inflow. Inflow means you'll show it as a positive number. Like that you can remember. One, if you remember, this is a current asset. No, one, if you remember, automatically other you can construct. This is not the actual logic. I've told you the actual logic with the ledger, but I don't have time to go into that, all that now. So easy way to remember the equation is just compare. One you remember, like debtors ka decrease you try to remember, automatically you can construct the other ones like that. Okay. Great. So after doing all this working capital changes, then deduct the tax. Tax paid is a separate category. You have to show tax paid at the end as per accounting standard 3 ka. So if you have any tax paid, deduct that. Then finally you will get operating cash flow. If this operating cash flow is positive, we say cash flow from operating activity. If this cash flow suppose is negative, we say cash flow used in operating activity. That's the naming given. Okay. This is about operating cash flow. For investing and financing cash flow, we don't have all this drama. There's a normal method. Only for operating cash flow, all this we have to do the drama. Okay. Fine, sir. This is about the method. Then some extra components we will discuss that will come as an adjustment usually in your cash flow statement problem. One such adjustment is provision for depreciation. Sometimes another name for provision for depreciation is accumulated depreciation. Either you can call it as accumulated depreciation or provision for depreciation. So as I've discussed with you in regular class, sir, there are two ways in which you can account depreciation, not charge depreciation. I'm not talking about straight line method, WDV method and all. There are two ways in which you can account depreciation. One method we call it as charge method. Another one we call it as provision method or accumulated depreciation method. And what is the normal entry for depreciation, sir? Depreciation account debit to PP account, and depreciation is an expense. You will transfer that to P&L. Correct? No? That's what you've been doing since your 11th grade. That we say we are following charge method. If you're passing this, then we say company is following charge method. Another method is there which is provision for depreciation method. If company is following provision for depreciation, then the entry for depreciation is an expense. So you'll write depreciation account debit, but you will not credit property, plant and equipment. Instead of crediting PP account, you will credit provision for depreciation account. All depreciation will be accumulated in an account called provision for depreciation. Depreciation is still an expense that will be transferred off to P&L. That's no entry. The only difference is instead of crediting PP, we will credit provision for depreciation. Okay, sir. So it makes a world of difference. How? Sir, you bought an asset for 1 lakh rupees. Let's say you bought an asset for 1 lakh rupees. First year you charge depreciation of 10,000. Let's say you're following provision for depreciation method. What is the journal entry you will pass? Depreciation account debit to asset account or provision account? Depreciation account debit to provision for depreciation 10,000. And that depreciation will transfer to P&L. That means what, sir? Did you even touch a PP ka ledger here? No. Did you debit PP or credit PP? No. That means whenever provision for depreciation account is maintained, fixed asset ledger will always be shown at highest value, which is original cost. Because all depreciation is parked in which account? Provision account. That means fixed asset ka ledger balance will never come down. If you bought an asset for 1 lakh means it will be at fixed asset ledger every year will be shown at 1 lakh. All depreciation account will get accumulated in provision for depreciation account. That's the difference. In first method, asset ledger balance directly will reduce. If you charge depreciation, it will be PP account, depreciation account debit to PP 10,000. That means PP ka ledger, if you bought it for 1 lakh means you would have credited by 10. That means PP ka ledger balance here will become how much? 90,000 in charge method. But however, in provision method, PP ka ledger balance will be still shown at 1 lakh only. That's the difference. Okay, so it has a significance in problems. I'll tell you, but quickly I'll just run through the significance now. Then we'll apply it in one of the questions. Okay, the next thing is, sir, how long will you maintain this provision account, sir? Sir, as long as you have the asset, provision for depreciation account also will be maintained. As long as you have the PP, provision for depreciation account also will be correspondingly maintained. Yes, sir. So the moment is asset is derecognized, meaning the moment asset is cancelled. How will you cancel, sir? If you sell the PP or if you write off PP or if you have given it on finance lease, if you remember AS 19. If not, I will take you through that. Okay. So if you have sold the asset or if you have written off the asset or if you have given it on finance lease, in these cases, you will cancel the asset. If asset is no more there, means provision for depreciation also will be no more there. Only provision relating to that asset. If you have 10 assets, one asset if you sold means provision for depreciation relating to one asset will be cancelled like that. So when you sell an asset, PP ka ledger balance also will come down. Provision ka ledger balance also will come down. Okay, sir. PP has what balance? Debit balance. When you sell an asset, so PP ka balance you need to reduce. It has debit balance. How do you reduce it? Credit it. Now, since asset is not there, should we maintain provision for depreciation for that asset? Not required. Provision has what balance? Look at the journal entry. Whenever you are accounting depreciation, provision for depreciation, you are crediting. So provision for depreciation ka ledger has what balance? Credit balance. Now we have to maintain that provision for asset sold or not required? Not required. Something which has credit balance, how do you cancel? Debit. So that means the journal entry when you sell the asset, you will pass as provision for depreciation account debit to PP account. Like this. Relating only to the asset sold. Not entire provision you will not close. Only that asset which is sold. Only that their provision you will close. Yes, sir. That is one. That's what I've written over here. Done? Okay. So in provision for provision for depreciation I've given. So check, sir. Provision for depreciation just now we discussed. It has what balance? Any provision for that matter has what balance? Credit balance. That means it is like liability. Liability ka opening balance visualize where it will come. When you prepare a ledger, liability ka opening balance where it will come? Credit side. So you'll write buy balance brought down. Opening balance comes on the credit side means closing balance on the debit side. Correct? Now if an asset is sold means is provision for depreciation required for that asset sold or not required? Not required. What is the journal entry to cancel the provision? Provision for depreciation account debit to PP. So this entry if you post it in the ledger, it will come on the debit side. This is one. Balancing figure is current year ka depreciation. Balancing figure that you get is nothing but your current year ka depreciation. Because what is the journal entry for depreciation, sir? What is the journal entry for depreciation here? Under provision method, what is the journal entry? Depreciation account debit to provision for depreciation. So when you post this entry in provision for ledger, what will be the entry? You will write by depreciation. Where will that depreciation get transferred to? P&L. Either you can write depreciation or directly you can write by P&L. Why? Because if you compare these two entries, depreciation debit, depreciation credit, effectively it will be nullified. So what are the two entries? P&L account debit to provision. So if you don't want to write P&L, you can also write instead of P&L, you can write by depreciation. It is fine. So why do we prepare provision account, sir? So usually in some problems, depreciation for current year will not be given. Depreciation for current asset current year will not be given. So when you open provision for depreciation account, there will be a balancing figure. That balancing figure is nothing but current year ka depreciation. Usually to get current year ka depreciation, we prepare this ledger account. That means if they have given current year ka depreciation, we need not prepare this account, sir. Yeah. Because even if you prepare, all the components is any which way given. You can prepare it, but no useful thing will come out of that ledger. I'll prepare it in one of the problem and I'll show you. So usually again we prepare this ledger only to get current year ka depreciation. Sir, asset is sold, no sir, why will depreciation come? Sir, all assets will be sold or only some asset will be sold? Only some asset will be sold. Only for those assets which is sold. Only for those assets ka provision will be closed. Yeah. Remaining assets will be there. No? On remaining assets you have to charge depreciation. So this entry will come. They will tell all this in the problems. Yes, Saru. Okay, this is about provision for depreciation. So do keep in mind. So how to find out whether they have done charge method or provision for depreciation method in questions? Check the balance sheet. In balance sheet, they will use something called gross block. Then they will say reduce accumulated depreciation, and then they will say net block. The moment you see the word accumulated depreciation, it simply means company is following provision for depreciation. Or instead of accumulated depreciation, sometimes they will say deduct provision for depreciation. That way you will get to know whether the company is following provision method or charge method. They will specify this word provision for depreciation or accumulated depreciation in the question. So it will not be a mystery. Once you read the question, you should be able to figure it out. That is one. All right. So next is with respect to dividend. Okay. So in dividend, some problems, what they will do is they will give you dividend payable, or they will also call it as proposed dividend. They can use whatever name, proposed dividend, dividend payable, dividend outstanding, whatever. They will give you balance sheet. Usually in cash flow statement problem, they will give you 2 years ka balance sheet. Last year ka closing balance will become current year ka opening balance. That's the reason they will give you 2 years ka balance sheet, so that you will be able to figure out the movements. So in that balance sheet, proposed dividend or dividend payable will be there. They will just give opening balance of dividend payable is 1 lakh, closing balance, let's say it is 1,50,000. Like that, they will give you the value. Nothing they will tell in the adjustment. That's all. In balance sheet, you are able to see proposed dividend or dividend payable. In the adjustment, nothing is given. So what to do? Sir, opening balance means that dividend relates to current year or last year. Last year, your company lost students. Once the dividend is declared, can you keep it outstanding or it has to be settled within 30 days? Once you declare the dividend within 30 days, you have to pay. Yes or no? Now, opening balance of dividend means it relates to last year. Last year already passed. Current year also already passed. Can you keep last year entire dividend outstanding, sir? So what is the rational assumption? Whatever is the dividend relating to last year will be assumed to be paid in the current year. That is the assumption you will make. Okay. So that's what I've written over here. So if they only give you dividend opening and closing balance, assume what, sir? Last year dividend is paid in the current year. The rational assumption, because you can't keep last year dividend and on outstanding like that. So proposed dividend ka format is also same. Proposed dividend is also a liability. Where will liability ka opening balance come? Credit side. So buy balance brought down on the credit side. Then closing balance on the debit side. Sir, if this is 1 lakh, let's say this is 1,50,000. If they give you no other information, that's all they give. They give 2 years balance sheet. Opening balance is 1 lakh. Closing balance is 1.5 lakh. So what will you do now? Tell me. This 1 lakh relates to last year. So what will you assume? This is paid in the current year. What's the journal entry for creditor paid? Creditor to bank. What's the journal entry for dividend payable paid? Same confidence. Dividend payable account debit to bank. So when you pay this, the amount is dividend, proposed dividend or dividend payable to bank. How much? 1 lakh. This 1 lakh relates to last year. We'll assume that it is paid in the current year. I mean, this side total will be 2.5 lakh. In my example, here also it should be 2.5 lakh. Is it matching or you're getting balancing figure of 1.5 lakh? You're getting a balancing figure of 1.5 lakh. What is that? So dividend only you will declare it in last year or every year you may declare? Every year you may declare. That means this is what, sir? 1.5 lakh rupees is a current year ka dividend. Think logically. When you declare the dividend, P&L balance will be same or it will reduce? Reduce. So what's the journal entry for dividend payable? P&L account debit to proposed dividend. Yes or no? Because due to dividend, P&L balance will reduce. So P&L account debit to proposed dividend or dividend payable, whatever name you give. So when you post this entry in proposed dividend ledger, the posting will be what? By P&L. That is nothing but current year ka dividend arrived as a balancing figure. Okay. So this is the assumption. What is the assumption? Last year dividend we assume to be paid in the current year. When will you make this assumption? In every problem? No. Only if they give you opening balance and closing balance and no other information is given. Only in that case we assume last year balance is paid off. And you make the same assumption for provision for taxation also. Same assumption will hold good for provision for taxation also. Same logic. Provision for taxation means tax you have to pay to the government. Opening balance means that provision for tax, the tax relates to current year or last year? Last year. Last year has already passed. Current year also has already passed. last year tax entire thing will be outstanding or it will be paid to the government? It will be paid to the government. So same adjustment, if they just give provision for taxation opening balance and closing balance and nothing else, only opening and closing if it is given, whatever is opening balance, we assume that it is paid in the current year. Just substitute the word instead of proposed dividend, substitute with provision for tax. That format also I've called out here. Provision for taxation also is a liability. Opening balance, this is closing balance. When you pay, the journal entry is provision for taxation account debit to bank. So you pay the tax only once or every year? Every year. That means every year you have to make the provision and every year you have to settle. What's the journal entry to make provision? When you make provision for tax, P&L balance will reduce. So what will be the journal entry? P&L account debit to provision for tax. So when you post this entry in provision for tax, the posting will be by P&L. There's nothing but your current year ka provision. Correct? So like this. Done? Okay, this is one thing. And another some highlights you need to keep in mind is, sir, under indirect method, no, we are only bothered about opening balance of current assets and closing balance of current assets. Only that you do it. Accordingly, if current asset balance is increased means you minus, decrease in current assets, you'll do it as plus. Sometimes in the adjustment, they will give you bad debts relating to debtors 10,000, discount allowed 5,000. All that chumma you ignore. You don't have to do anything because under indirect method, we only compare opening balance with closing balance. Rest of the components, I've told you the logic, it has already gone to P&L. So that means that adjustment is already done because bad debts means bad debts is already transferred to P&L. Again, if you give its adjustment, no, the cash flow statement will not match. So as per as current assets, I will not go into details of all this. We have done problems also based on this in question. Okay. So if you refer the notes, those of you who are saying my students, you'll be able to get this. For the others, you can just remember like this. Okay. As far as current assets and current liability is concerned, we only take into account opening balance and closing balance and find out whether the current asset is increased or decreased. Other adjustments if they give you like bad debts, discount allowed, discount received from creditors, whatever they give, chumma put one line. No need to actually put a line. Simply think that it is not there and move. Okay, like that. Then do not forget one hidden adjustment called interest. In the balance sheet, they will say 10% loan. In the adjustment, they will not say anything. That means what, sir? Interest on debenture has to be accounted. Do not forget that. Okay, they will not give you. Sometimes interest adjustment will be given as adjustment. But sometimes in the balance sheet only, if they say 10% loan, 9% interest and all, do not forget to consider the interest. Both under operating cash flow and under investing cash flow. So why under operating cash flow? Sir, interest expense is already transferred to P&L. Due to interest expense, P&L balance has reduced. Under indirect method, from P&L only we are getting operating cash flow. So if P&L balance is reduced means operating cash flow is also reduced. But interest expense is not an operating activity. It's a financing activity. But operating cash flow is reduced. Hence what do we need to do? In operating cash flow, you need to add. And later on, you'll pay this interest expense. No, interest payment is what activity? Financing. And a financing activity, you need to minus. Okay, so do not forget this. This will be a hidden adjustment in majority of the questions. That is one. So with this, all the concepts we have done. Now, can we quickly run through some of the questions? First is your RTP question. RTP May 24 questions. Sir, the moment they say retained earnings, name itself is saying retained earnings. Retained earnings simply means after doing all the adjustments, how much ever profit remains. Whatever is profit remaining after all the adjustments, only we call it as retained earnings. That means in this problem, what have they given? They have given you profit after all the adjustments. That means everything, dividend, transfer to reserve, everything is already considered. So that means that whole format what I have given will hold good in this problem. So that they have given us 17,000. So simply you need to check this adjustment, accordingly tell me plus minus. First, depreciation. Due to depreciation, P&L balance has reduced. So P&L balance is reduced means operating cash flow also has reduced. But it's a non-cash expenditure. Hence what to do? Add back. So depreciation you need to add back. Loss on sale of machinery. Due to this loss, P&L balance has reduced. So operating cash flow also has reduced. But loss on sale is not operating activity. It's an investing activity. Hence what to do? But operating cash flow is already reduced. Hence what to do? Add that. Next, provision for tax. So tax, nothing, no. Sir, tax paid, you have to show it as a separate category at the end. Okay. So when you make provision for tax, what is the journal entry for provision for tax? The journal entry for any provision is what? P&L account debit to provision, respective provision. Here it will be provision for tax. How much have you made? 7,000. Correct? Sir, if you have debited P&L means P&L balance will increase or reduce. Visualize. P&L, you will show it in your reserves and surplus. That means it has credit balance. So due to this provision, P&L you have debited means P&L balance has reduced. Okay. Hence what do we need to do? Add back. Because tax paid, you show it separately. So we don't want provision for tax. We want tax paid. So sometimes whatever you make provision, that much only you will pay. Provision for tax is estimated tax. Provision for tax means estimated tax. Will you do the estimate so nicely that only you will pay to the government, or your estimates can go wrong? Sometimes you may make a lesser estimate or you may make a higher estimate. So whatever provision you have made, this much profit is reduced, so add back. So first you will add back this. Tax paid, probably they will give it at the end. We will consider it later. For now, add back provision for tax. Correct? Interim dividend paid. So what is the journal entry for interim dividend paid? Interim dividend account debit to bank account. That interim dividend you will adjust it from. You will pay dividend out of profits only. No? Only if company pays, makes profit, only such companies will pay dividend. So due to dividend, P&L balance will be same or it will reduce. Due to dividend, your P&L balance will decrease. Yes or no? So what profit have they given you in the problem? Profit before tax or profit after all adjustment? They have given profit after all adjustment. That means has this dividend already deducted from P&L? Yes. But dividend paid, if dividend is already deducted from P&L means your P&L balance has reduced. From P&L only you are getting operating cash flow. If your P&L balance is reduced means your operating cash flow is also reduced. But dividend paid operating activity or financing activity? It's a financing activity, but operating cash flow is reduced. Hence what to do? Add back. Done. Why? The key point there is this is profit after all adjustment. Suppose this was profit before tax, or if it was profit after tax, this adjustment I would have ignored. I would have not added also, I would have not subtracted also. Why? So when you say profit before tax, when you say profit before tax or profit after tax, is dividend already deducted or yet to be deducted? If you take profit before tax or profit after tax, the dividend is not yet deducted. That means profit is not yet reduced. Then why are you adding back? Is that okay? Only if you take profit after all adjustment, then only this apportionments and all you will add back. Otherwise, you will ignore like this. Okay, sir? Since in this problem it was profit after all adjustment, dividend is already deducted, so we add back. That's one. Next, dividend paid. Sir, dividend paid again. This is a norm. Sir, they only told before, no, sir. Sir, interim dividend means dividend declared between two annual general meetings. It's like shareholders are continuously asking dividend. Company told, take and keep quiet. Some amount you give for the time being and say, take it and shut your mouth. After the year closes, then we will give you the final dividend. So this is your interim dividend, meaning it's a chota dividend. Time being dividend. Okay. This dividend paid is your final dividend that they're talking about. Okay, sir? Alright. So what do we do for this? This is your proposed dividend or final dividend. Fine, sir. That means here two dividends company has given. Interim dividend also, final dividend also. So when you pay the dividend, what sort of profit is this? Profit after all adjustments. So that means this, due to this dividend, your P&L balance again has reduced. But dividend paid is operating activity or financing activity? Financing activity. But your operating cash flow is reduced. Hence what to do? Add back this also. Premium payable on redemption of preference shares. Premium payable on redemption of preference shares. Sir, premium payable on redemption of preference shares is a loss, sir. I will transfer it to securities premium, sir. Yes, sir, you're right, sir. But have they told company has security premium anywhere here, sir? No, sir. That means what, sir? Here, premium payable on redemption of preference shares is not transferred to securities premium. It is transferred to P&L. Because you can transfer premium to securities premium only if security premium has a balance. If it doesn't have balance, then this premium, which is a loss, will be transferred to P&L itself. Okay. So I want to assume secure company has security premium. In these sort of problems, don't assume that, you'll lose marks. Okay. So in these problems, premium and all will be transferred to P&L itself. So premium is a loss. This loss has been transferred to P&L means P&L, due to this loss, P&L balance has reduced. If P&L balance is reduced means operating cash flow also has reduced. But premium payable on redemption of preferences is what activity? Operating activity or financing activity? Financing activity. But due to this, your operating cash flow is reduced. Hence what to do? Add back. Like that. Okay. Next, profit on sale of investment. You have sold some investment at profit. So this is an income. Due to this income, your P&L balance has increased. So your operating cash flow has also increased. But sale of investment is operating activity or investing activity? Investing activity. But your operating cash flow has increased. Hence what to do? Minus. 10,000 you have to minus. Last, refund of tax. Sir, what is the journal entry for refund of tax? When you make, what is the journal entry for provision for tax? P&L to provision for tax. Now you have received a refund. So the journal entry will be bank account debit. How much is the refund you have received? 1,000. So bank account debit 1,000. You have to credit something. No, you will credit P&L account. Bank account debit to P&L account. How much? 1,000 rupees. Normally you set it off with provision and all, leave that. That's all right. So in this, you can treat it as bank account debit to provision for tax. Even if you write provision for tax, that means this provision for tax will not be 7,000, it will be 6,000. I've already given the effect of this 7,000, no? So don't have to touch provision again. Directly we'll write bank to P&L. Okay, sir, everybody? So tell me, sir, what happened due to this adjustment? Because of this adjustment, P&L got credited. P&L already has credit balance. Again, if you credit means its balance will increase. So due to this adjustment, your P&L balance has increased. P&L balance is increased means your operating cash flow also has increased. But tax paid we showed a separate category, no? For the time being, reduce it. For the time being, you reduce it. Later on, we will see. As a separate category, maybe we will show. So this 1,000 has to be deducted. So if you do all this plus minus, or in fact, some more are there. Okay, this is one. Next is what, sir? Additional information they have given. 31st March 2022, that is your previous year. Current year is 31st March 2023. So they have given some components. They have given components of current assets and current liability. This only is what, sir? Your working capital changes. Check. Trade receivable. Trade receivable means your debtors and bill receivable put together. Generally, many companies will not have bill receivable. That's the reason we say debtor itself is trade receivable. Actually, debtors and bill receivable put together, we call it as trade receivable. Most of the case, this will not be there. Hence, we say debtor. Okay. How much is the opening balance of debtors? Previous year ka closing balance will become current year ka opening balance. So this is your basically opening balance. This is your closing balance. Opening balance is 10. Closing has become 12. So current asset has reduced. Debtor has increased or reduced? Debtor has increased. So how much it has increased by? 2,000. So increase in current assets means what you have to do? Minus. So reduce this. Trade payable. 7,000 has become 15,000. From 7 it has become 15. So it has increased. Increase in current liability means what do you do? Plus. Provision for tax. For provision for taxation, we do a separate ledger. I've showed you the format. Can we do off the separate ledger? How much is opening balance? 7. How much is closing balance? Sir. Or rather 4,000 and 7,000. Okay. Sir, they've given opening and closing balance. Sir, opening balance will assume it is paid, sir. No. What did I say? Only if they give you opening balance of provision of a tax and a closing balance for provision of tax and no other information. Sir, here no other information or provision for tax also. Provision made in the current year also information is also given in this problem. So in this problem, I don't assume the thing which we just now discussed. What we discussed will only hold good if they have given only opening balance and closing balance and no other information. Your information is given, yes. So first write opening balance. How much is the opening balance of provision? 4,000. Then how much is the closing balance of provision? 7,000. Opening balance, liability, opening balance, credit side, closing balance, debit side. Okay, no? Current year, did you make any provision for tax? Yeah. How much? 7,000. What is the journal entry to make provision for tax? P&L account debit to provision for tax. So what is the posting of this entry in provision ledger? We'll post it as by P&L 7,000. Any other information or that's all? That's all. So this side total is 11. That side also should be 11. But you're getting a balancing figure of 4,000. That is what, sir? Tax paid. Okay, sir. Ironically, here opening balance itself is paid, but it need not be in every case. Here it is working out, but don't make that assumption in every case. Hope everyone is good. Any doubt here? Okay. Sir, 1 minute. I'll come to that. Sir, tax paid. No, sir. Where will you show? As a separate category at the end. So at the end, mate, don't show 4,000. Show only 3,000. Why? Don't show 4,000. Show only 3,000. Why? Sir, you paid 4,000 to the government. Government was so nice. They gave you 1,000 back. That means effectively, how much have you paid? 3,000 rupees. So in the end, when you prepare cash flow statement here, no, you will not show tax paid as 4,000. You will show it as 3,000. Rest of the adjustment, same thing we discussed. Plus minus you do. You will get operating cash flow. Net operating cash flow. Okay, sir. Okay, and in fact, maybe this also we'll discuss of prepaid expenses. Opening is 2,000, closing is 1,000. So prepaid expense is also a current asset. No? Opening balance is 2, closing balance is 1. So current asset has reduced. Decrease in current assets means what do we do? Add of 1,000. So they must have done it over here. One I'll just quickly show you. Increase, where is that part? Decrease in prepaid expense 1,000. They plus. Like this plus minus, you have to put it in this format and figure it out. That's all. Okay, the question solution starts from here. Some adjustments, they've done it here. Done now. Okay, next you check, sir. Outstanding expense. Outstanding expense is a current liability. Opening balance is 1,400. Closing balance is 1,000. From 1,400, it has become 1,000 means it has reduced. Decrease in current liability means plus or minus? Minus. So minus 400, they would have done it here. Check. Decrease, where is that by here? Decrease in outstanding expense. That plus minus you do and you will finally get your operating cash flow. In that format, you put it. No need to write in this what is non-cash, what is non-operating expense, non-operating income, like that. Category name and all not required. Simply take profit and go on doing the adjustment. Like here they've done. Add depreciation, add loss. Like that, you go on adding, subtracting, whatever it is. Finally, you'll get the number. Okay, Sarji. Okay, this is good problem with respect to refund of tax. That's the only good thing out of this. Rest everything is pretty much straightforward. Okay. All right. So this is about RTP question. Can we move on to the next? Excuse me. This is your MTP question. MTP March 24 wala question. From the following information, calculate operating cash flow. Not whole thing, only operating cash flow. In the previous problem also, it was same thing. You don't have to prepare whole cash flow statement, only operating cash flow. Sir, they've given you cash account. Such nice problem. Directly, they've given you cash account itself. Sir, if they give you cash account means in cash you will have cash received from debtors, cash paid to creditor, cash purchase, every cash data will be available. No, I mean, should we use indirect method or we can use direct method? Here you can use direct method only because all the informations are straight away available. Okay, na sir? Okay. So first, opening balance of cash and all not required. They only ask cash flow from operating activity. So first, cash sale. Cash sale is what activity? Cash sale. I have to erase this off. Better, no? You tell or else. Answer. Better. We'll check it later. Okay. Cash sale is what activity, sir? It's an operating activity. And what will you show? In cash flow statement, when there is an inflow, you show it as positive number. Outflow, you show it as negative number. This you'll write it as O plus. Meaning under operating activity, you will add this. Okay. Online also go on responding. Trade receivables. This is cash received from debtors. Is it part of operation? Yes. Well, inflow or outflow? Inflow. So plus. Yes. Okay. Next. Trade commission. Trade commission received. Commission is also part of your operating activity only. So that means this is also O plus. Okay. Sale of investment. Sir, sale of investment is what activity? Investing activity. Under investing activity, you will show it as plus. Loan from bank. You have taken a loan from bank. So loan taken from bank is a financing activity. Under financing activity, you will write it as plus. Sir, all these are debit side. In debit side of cash flow statement is all for receipts. Credit side of your cash account is for all your payments. Okay. So this is interest and dividend. They did not say whether it is received or paid. Sir, it's coming on the debit side. So obviously the entry is cash account debit to interest. You're crediting interest means this interest is an expense or an income. So that means what is this? This is obviously interest and dividend received. So interest and dividend received is what activity? Investing activity. Under that you will show it as plus. Okay. Cash purchase. Cash purchase a trade payable. Both are what activities? In fact, this also. Off is expense. All the three are what activity? Operating activity. All these are payments. So you'll show it as minus. Income tax. Income tax also will come under operating activity only as a minus. Sir, this is provision for tax. Hey, this is cash account. In cash account, if they show income tax means this is provision for tax or this is tax paid. Tax paid. Tax paid also will come under operating activity. Sir, tax can come under other category also, no sir? Yeah. Tax can come under operating, investing or finance anywhere. Suppose you have paid a long-term capital gain tax. LTCG you will pay on sale of assets. Sale of asset is what activity? Investing activity. So if you have paid any long-term capital gain tax, that should be shown under investing activity. If you have paid any dividend distribution tax, since the company has paid some dividend, they paid dividend distribution tax. Then that dividend distribution tax is a financing activity. Cash flow. DDT though is established, leave it. But if they just give you income tax in the problem, no other information is there. You pay maximum tax related to your operation. No? Hence tax, no. If they give no other information, we'll show it under operating activities. If no other information is available. If they give further information, this tax could come under investing and finance activity also. No information, put it under operating activity. Here any information is given or no info? No info. So you'll put it under operating cash flow. What about investment? Sir, this is investment purchase because it's coming on the payment side. So this will be under investing activity. It will come as a minus. Repayment of loan is what activity? Financing activity. You will show it as minus. Interest on loan. You have paid interest on loan. Again, it's a financing activity. They asked only operating cash flow. So take your calculator. Wherever I've written O plus, add this. Where I've written O minus, reduce this. This also. So these boxed item you plus, these boxed item you minus. How much are you getting finally? Fadafat. Calculator I also don't have. You have, you can calculate. Minus 17,000. So that's what they've given the answers. Okay, now that is what, sir? Net cash flow from operating activity or used in operating activity? Net cash flow used in operating activity. That's the answer. Hmm? Yes, sir. So today's last topic is yes, 3 years, sir. No. Okay. I got a little extra classroom time I have got it, so I'll stretch a little bit. Maybe 2 more topics or 1 more topic, depending on time, we will see. Okay. Alright, as I told you, ending time you leave it to me. Be prepared for half an hour, 1 hour extra stretching. Okay. If someone bangs on our door, that means it is time for us to vacate, then we will vacate. Till then, we will do it. Yeah. Sir, one question we will do. Full-fledged question. RTP, MTP question was pretty straightforward. I'll run you through one full-fledged question so to have a little more clarity. Ryan Limited provides you the following information for the year ended 31st March 20X1. This is a study material question only. Sir, sales, COGS and all they've given. Basically, this they have given you is your P&L information. Check at the end. They've deducted income tax. So this is profit before tax. This is profit after tax. Okay, sir. Sir, if you have a choice, what will we take? You always take profit before tax, because if you take profit after tax, you have to adjust tax also, because we don't want, this is what, sir, this is not income tax paid, this is provision for tax. Correct? No, we don't want provision for tax, we want tax paid. So if you take 16,000, any which way you have to add back 7,000. That is the reason when you have a choice, always choose PBT. Sir, I will directly select this one, sir. No, don't do that. Cash flow statement is backed by accounting standard 3. So AS3 usually says it start with profit before tax. So always select profit before tax. Okay, that's your starting point. Sir, how did you arrive profit before tax? Few things they've already added, subtracted. Okay, check, sir. This is the total. This 8,000 is total. Leave that. Loss on sale they've already deducted. Hence, what do we need to do? Loss on sale of plant is an operating activity or investing activity? Investing activity. But it is already transferred to P&L. So P&L is already reduced. If P&L is already reduced, means operating cash flow also indirectly already reduced. And what do we do? Add back. Then gain on sale of investment. So this is also what, sir? Investing activity. This is a gain. So P&L balance has increased. So operating cash flow is also increased. But there's an investing activity. Hence what we have to do? Minus this. Interest income received. On income they have transferred to P&L. So income has increased. But again this is an investing activity. But operating cash flow has increased. So what to do? Minus. Interest expense paid. Interest expense have transferred to P&L means P&L balance has reduced. So operating cash flow is also reduced. But interest is a financing activity. Hence what do we need to do? Add that. Check, have they done all this? They've taken 23,000 and what and all they've chosen? 3, 12, 6, 23. 3, 12, 26, 23. All that they've added, subtracted accordingly. Okay, sir. Check if there's anything more. Yeah, go above. Operating expense, they're saying operating expense is 147. In this operating expenditure, there is a depreciation of 37,000. Depreciation is already deducted. It is part of this 147. Hence, what to do? Non-cash expenditure has reduced your P&L. Hence, what you have to do? Add back. Check, have they added back 37,000 P&L? Yeah. So what about COGS and all? COGS is related to your operation activity only. It has gone to P&L and it has to go to P&L only. I mean, should we have to worry about all this? Operating items ka cash flow, don't have to worry. Only investing financing activity ka cash flow, if it's gone to P&L, reverse it. Okay, these are all part of operation. Sales, COGS. Selling of a goods is part of your operation. So it should go to P&L. And it has gone to P&L, no harm. COGS also is part of your operating activity itself. Even operating expenditure here includes your employee benefit, employee salary paid to employees, rent, electricity. All this is reduced P&L. It has gone to P&L means it has reduced P&L. Operating cash flow is also reduced. And it should be reduced because of this items, P&L balance or cash flow balance will reduce. So nothing to be done for these. For operating activities, don't worry. Only for investing and financing activity, if it has gone to P&L, reverse it. That is one. Okay, let's go to the other table now. They've given you information for 31st March 20X1 and 31st March 20X0. So this is for current year and previous year. Sometimes they interchange this table, always watch out. First, they will give you current year data or previous year data, changes from problem to problem. Okay. Plant, sir. Check here. Below plant, they've written accumulated depreciation. Which method? Charge method or provision method? So whenever you see, sir, in cash flow statement, no, how to do it quickly is, before you start reading the question ka balance sheet and all this data, no, straight away come to adjustments. Have a quick glance through. No need to read. Just quick glance. I saw some investment, plan to, some bond to, some dividend. That means one ledger I have to put it up for investment, plan to, bond. For those, I will not directly bring the effect into cash flow statement. First, I'll prepare a ledger because some components will be missing. You have to prepare a ledger and then figure out the missing components. So rest other things you can do it. So again here, what sir? investment to, plan to, some bond to they have given, and some dividend. Dividend I think we just paid, so it's not a problem. So these three have to put up a ledger. Okay, so first let's prepare plant. Also some things were there, no? So let's prepare plant ka ledger and provision for depreciation ka ledger. Actually here provision for depreciation ledger is waste. Why? Sir, they already gave depreciation in the problem. Normally we prepare provision for depreciation to get current year ka depreciation as balancing figure, and we already got it. So even if you prepare provision for depreciation, no extra information you'll get. For simplicity, I've prepared it, I'll show it to you. Okay. Now, how much is plant ka opening balance? 5 lakh. Previous year ka closing balance will become current year ka opening balance. So this is opening balance and this is closing balance. So opening balance of plant, I've already done it here. To balance brought down 5 lakh 5,000. Closing balance is 7 lakh 15,000. As and when we see, we'll go on ticking. Okay, now this way we'll be able to solve it faster. Okay, next, they've given provision for depreciation ka opening and closing. So provision ka ledger will have a debit balance or credit balance. Provision means it's a liability, kind of liability. Liability ka opening balance, where it will come? On the credit side. So provision for depreciation, you'll write opening balance here, closing balance, that's it. Yes, sir. Whatever is given in the question, I posted it into the ledger. Okay. All right. Now let's see the other one. This is your net block. So leave that. That we don't have to worry. Investment. Was there any adjustment relating to investment that we read? Yes. So we'll prepare investment ka ledger also. Opening balance 127, closing balance 115. Investment is an asset, no sir. Asset ka opening balance on the debit side, closing balance on the credit side. Posted. Whatever we identify, that only we'll take. Later on, we'll check what is the unticked items. Most probably it should not be any. Everything we should have ideally ticked by the end of the reading the problem. Inventory. Sir, inventory open ledger, sir. Inventory is a part of your current assets. For current assets, you simply have to compare opening with closing and see whether they increased or whether they reduced. What is opening inventory? Here, do this comparison. This is your opening balance. Opening balance was 110. Closing balance has become 144. So it has increased by how much? 34,000. So increase in current assets means minus. So have they reduced 34,000? Check in your cash flow statement. Increase in inventory, 34,000 they have reduced. Okay. This is your cash flow statement. All right. Next is our trade receivables. Opening is 55, closing is 47. So trade receivable has reduced by 8,000. Reduction in trade receivable means plus. Check if they added 8,000. Yeah, decrease in trade receivables, they've added 8,000. Next, cash. This is your opening cash, this is your closing cash. For opening cash and cash equivalent, there is a separate category at the end, which is how much? 15,000. Closing is how much? 46,000. Check at the end, have they taken a opening cash and cash equivalents is 15, closing cash equivalents is 46. Okay, so that is your last me. You have to plug in this. Next is what? Prepaid expense. Again, it is part of current assets. Opening is 5, closing is 1. So it has reduced. It has reduced by how much? 4,000. So decrease in current asset means plus. Check if they added 4,000 in cash flow statement. Yes, decrease in prepaid expense they've added. All right, next share capital. 315 has become 465. I mean, share capital has increased by 1,50,000. Share capital is increased because company has issued some extra shares. That's what they told over here also. We have issued 15,000 shares of 10 each. So total value is how much? 1,50,000. When you calculate opening and closing cut difference, how much are you getting? 1,50,000. Company has issued additional shares means it is what? It's a source of finance. So where will this 150 come? OCF, investing cash flow or financing cash flow? And a financing cash flow, check. You should add it or subtract it. Company has issued equity shares. So company will pay the money or receive the money? Receive. So you have to show it as an inflow. So 150 they have added under financing activity. Okay. Pace is okay, no sir? Everybody comfortable, no? Yeah, I know that I'm doing a little faster, but in the interest of time, I have to kind of manage it because I want to cover majority of the adjustments. But I know that I can go a little slow. But the problem here is from 20 hours, the revision will become 30 hours. And last day, you may not have that much amount of time. So we also have to do it a little faster. Those of you who are doing it for the first time. So some of you have done it, may understand it. It's not going to be a problem. Some of them who have entirely skipped the cash flow statement. Then you may feel, what the hell is this guy telling? I thought we will learn something. He's doing. If you feel that is the feeling, no problem. It's available anyway on YouTube. So you can replay the video. Because I want to make sure that it is it suits everyone's purpose. So I'll have to maintain the little extra pace here to catch up and cover the topics. We have close to 30 topics I have to cover. So we are in the 5th topic now. So another 25 topics more to cover in 4 days. So you can imagine the target. But at the same time, I don't want to just revise it at concept level. If I only revise concept, then accounts will become a theory subject, which you may not understand. Because only when you apply it, we will get it better. So concepts, we can go a little slow. Problems, we have to be a little faster. I'll try to maintain that, yeah. Apologies for someone who feels that it is going a little faster. Interest of time, I have to maintain this, yeah. Okay, come back to this now. Reserves and surplus, relevant or irrelevant? Irrelevant, because I already got my profit before tax, so this becomes irrelevant. Bond, opening 245, closing 295. There was some adjustment, no? Bond means your debentures. Debenture is an asset or a liability? So that depends, sir. If you have invested, it will be an asset. If you have issued, it's a liability. Have they told, sir, they've given bond below share capital and reserves and surplus? That means what? This is invested or it is issued. These bonds are issued, meaning it is not an asset, it's a liability. Liability opening balance 245, closing is 295. Brought it in the bond account. Okay. Bond also there was an adjustment, no? Hence I prepared bond ledger. Next, what is that? Trade payable. Opening is 43, closing is 50. So trade payable has increased. How much? 7,000. So increase in current liability means plus. Check, have they added 7,000 in operating cash flow? Yes, they have added. Okay, next is what, sir? Outstanding liability. Again, current liability. Opening 9, closing 12. Again, it has increased by 3. Check, have they added 3? Yes, it is done. Next, income tax payable. Income tax payable, we have to prepare a separate ledger. So can we assume opening balance is paid in the current year? No. Why? Because they have given P&L, and P&L may we have provision for taxation. That means income tax, we have to prepare a separate ledger. You can call it as provision for tax, income tax payable, whatever name, it's fine. So let's prepare that ledger. Provision for tax, opening balance is 5, closing balance is 3. You also got provision for tax from P&L. How much is provision for tax in P&L? 7,000. What is the journal entry for provision for tax? P&L account debit to provision for tax. How much? 7,000. When you post this entry in provision for tax, the ledger will be by P&L 7,000. That means this ledger we can close off. This side total is 12. That side also should be 12, but we only got 3. You're getting a balancing figure. How much? 9,000. What is that balancing figure? Tax paid. So tax paid is how much? 9,000. Tax provision we added back. Tax paid you need to deduct at the end. Yes, no? Huh? Oh yeah, if we took PBT, correct. If you're taking PBT, means 7,000 need not be added back. Correct. So in this problem, we ignored it. Correct. Okay. How about tax paid? 9,000 should be deducted in operating cash flow at the end. That they've done it here. Yes, sir. Awesome, sir. Next is what, sir? Anything else, sir? That's all. I think now we'll go into the adjustment. Purchased investment for 78,000. What's the journal entry for investment purchased? Investment account debit to bank account. So investment ledger mein you'll write to bank account 78,000. Okay. So what about cash flow statement? First I'll prepare the ledger. All the ledger ka impact in one shot mein we will push it to cash flow statement. For now, don't worry. Sold investment for 1,02,000. What is the journal entry for investment sold? Bank account debit to investment account. So investment account you'll write by bank 1,02,000. Okay. But the cost of that investment was only 90. Cost is 90. You sold it for 1,02,000. That means you made a loss or profit. How much profit? 12,000. Profit means it will come on the debit side, credit side, which side? In investment ledger, debit side. Profit you'll write to P&L account 12,000. So why it will come on the debit side, sir? Sir, investment is shown at cost. Correct? So when you sold an investment, what was the cost of that investment? Cost of the investment was 90,000. So ideally, the journal entry should have been bank account debit. How much did you sell it for? 1,02,000 to investment account. Investment is shown at cost value. So you should reduce it by cost. And the balance figure is profit, which should have been transferred to P&L account. This is ideally the way you need to pass your journal entry. But you know how our study material passes and how we also need to account it. Like what, sir? First entry, what they'll pass is bank account debit 1,02,000 to investment account 1,02,000. First entry. But investment is shown at cost price. So when you sell an investment should be reduced at cost price. But you reduce by how much? Selling price. That means you reduce more. Hence next entry you will pass is investment account debited to P&L account 12,000. This way what happens? Credit 1,02,000, debit 12,000. So net effect is what? Net effect of this is 90,000 credit. So this is what the approach our study material follows. That's the reason we'll stick to the same. Okay, sir. Both approach will give you the same answer finally, but this is what they will do. So we'll stick. Is that okay, fine with you people? So hence we say profit means it comes on the debit side, loss means it comes on the credit side. You might have heard me telling that. I explain all this in class, but just for the new audience telling. So what is the posting of this entry in investment ledger? to P&L account, how much? 12,000 rupees, which I have ticked off here. Okay, sir. All right. Next, what, sir? Purchased plant asset for 1,20,000. What's the journal entry for plant asset purchased? Plant account debit to bank account 1,20,000, which I have posted here. Okay. Next is what, sir? Where is the next adjustment? This one. Sold plant at a cost of 10,000. Cost, when they use the word cost, it means original cost. What is the original cost of the plant sold? 10,000. Its accumulated depreciation is how much? 2,000. So far you have depreciated this asset by 2,000. Initially you bought it for 10. So far you have depreciated by 2. So what is the carrying amount of that investment? 8,000. But you sold it for 5. 8,000 worth of asset, you sold it for 5 means you made a loss on sale 3,000. That's what they passed in your P&L account as loss on sale 3,000. Okay. Sometime in the problem, loss on sale, they will not give it to you. Hence, better prepare a working note. In this problem, it is given. But if they don't give, you need to ascertain like this. Original cost is 10. So far, you have depreciated this asset by 2. So carrying amount is 8. You sold it for 5. Hence, there is a loss of 3,000 rupees. Done, Asaru? Now, think the journal entry. That is more important to us. Sir, which method of depreciation is followed? Charge method or provision method? Charge method or provision method? Provision method. Correct? Because we saw provision for depreciation here in the ledger only. Correct? So we know the importance. Whenever provision for depreciation account is maintained, fixed asset ledger will always be shown at the original cost. Correct? No? Till the asset is sold, asset ledger will be maintained at original cost. Once the asset is sold, you have to reduce the asset cost. By what value? Original. Because asset is shown at original cost. When the asset is sold, you need to also reduce it by original cost. Okay. So that means that is one. Fixed asset ledger should get reduced by original cost. That means you'll credit PPE by 10,000. Is my statement right? Yeah. You sold an asset. How much did you sell it for? 5,000. That means you'll write bank account debit 5,000. Comfortable? Now, sir, if an asset is sold means provision for depreciation relating to that asset is required to be maintained or not required. As long as you have the asset, you will maintain the provision. The moment you de-recognize the asset or sell the asset or write off the asset, provision also should be closed. Entire provision or relating to this asset only. Relating to this asset sold. Relating to this asset, how much accumulated depreciation you have? 2,000. That much you need to reverse. Provision for depreciation has what balance? Credit balance. How do you reduce it? Debit it. So you pass the entry accumulated depreciation or provision for depreciation account debit to PP account. How much? 2,000. So you have credited by 10. Here you are getting by only 7. What is the balancing figure? 3,000. That is nothing but your loss on sale. So basically, I used to tell you in the problem, whenever this provision for depreciation account is maintained, add 3 components. And when you add the 3 components, you should get original cost. If you don't get it, somewhere you have not done wrong as a checkpoint. This is the logic for that. This is an entry basically. Okay, Nasaru? This entry we have to post it in PP ka ledger. So the posting will be by bank, by accumulated depreciation, by loss on sale. Profit on sale will come on the debit side. Loss on sale will come on the credit side. Like that. Yes, sir? Okay. Next, what else is there? This is over. Issued bonds of face value 1 lakh in exchange for plant assets. So you purchased a plant for 1 lakh. Instead of paying cash, you give your company ka debentures. Okay, so what's the journal entry for plant purchased and cash paid? Plant account debit to cash account or plant account debit to bank account. Here, did you give cash or bank or you gave away bonds? So what's the journal entry? Plant account debit to bond account. Plant account debit to bond account. So in plant account, the posting will be 2 bond, 1 lakh. So in bond ka ledger, you will post it as buy plant and machinery 1 lakh. Like this. Okay. So this is about that entry ka posting. Okay, next is what, sir? Repaid 50,000 bonds at face value on maturity. Some debentures or bonds have got redeemed. So what is the journal entry? Sir, if you are redeeming the debenture means liability value will be same or it will reduce? Reduce. So what's the journal entry for liability paid off? What's the journal entry for creditor paid? Creditor to bank. What's the journal entry for debentures paid off? Debenture account debit to bank. Debenture only here referring to as bond. So the entry for this is what, sir? Bond account debit to bank account. How much in bond account? You will post it as to bank 50,000. That's a posting. All right. Okay. Next. What is the next one? Where is the next one, pa? Here. Issued 15,000 shares. That I think we already captured. In financing activity, we already shown that. Paid cash dividend of 8,000. Dividend paid is what activity? Financing activity. Check under financing activity. They have deducted 8,000. Because when you pay the dividend, it's a cash. outflow. So you'll reduce that. Okay. All right. This is one. Anything else we have captured, or that's all? Everything we have captured. Now just go on closing the ledgers one by one. So anything is remaining unticked or everything captured? Everything captured. So after plugging all these numbers also, if you're getting a balancing figure, that means additional, if you're getting balancing figure on the debit side, it means additional plant has been purchased. If you're getting balancing figure on the credit side, it means additional plant has been sold. Sometimes you'll get it, sometimes you may not get it. Here we have it or don't have it. Don't have it. Okay, this is one. Accumulated depreciation. Sir, I think one entry we posted, we forgot to do it here. I think this journal entry. We passed in PP account, we posted this entry, correct? But in accumulated depreciation, did we pass the entry? What is the journal entry for this? Accumulated depreciation to PP. So in accumulated depreciation, you write PP, correct? So this side total is how much? 105. That side also should be 105. One more entry, you can get it as balancing figure or it is given also in the problem. Current year ka depreciation is how much? 37,000. What is the journal entry for depreciation under this method? Depreciation account debit to provision for depreciation. Either you can write by depreciation or directly you can write P&L. So you can get as balancing figure or in fact it is given to us in the problem. So that means this preparing this ledger was really not required for this problem. But if they don't give you current year ka depreciation, you can get current year ka depreciation by preparing this particular ka ledger. Okay. Now these two ka impact will quickly push it into cash flow statement. Look at the debit side of plant and machinery. Here you have two bank. That means plant and machinery purchased. Where should it come, sir? Investing activity, they have deducted 120. Okay. Bond. Sir, you purchased a plant and gave bond. Cash coming in or cash going out or nothing? Plant and machinery came in, bond went out. Cash came in and cash went out. No. We are preparing only cash flow statement. That means we are only concerned with cash coming in and cash going out. Because of this transaction, there is no inflow of cash, nor there is any outflow of cash. So it is ignored. Correct? Check the credit side. Buy bank 5,000. So this is sale of asset. Sale of asset means outflow or inflow? Inflow. Under investing activity, have they taken plus 5,000? Yes, that is also pushed. Okay, loss on sale has already gone to P&L, which we have added also here. We have already added. Correct, sir? That and all adjustment already done. Now check the investment account. It is also matching. That means there is no balancing figure. Push the impact. You're right. You have two bank here. Two bank means it is an investment purchased. So investment purchase, where it will come? Under investing activity, minus 78 have they done? Yes. Check on the credit side. You have buy bank. Buy bank means it's a sale of investment. Sale of investment, where it will come? Investing activity as a plus. Have they taken plus 102? Yes. Sir, you sold this investment at profit. Profit has gone to P&L. Due to this, P&L balance has increased. So operating cash flow also has increased. That means what we have to do? Reduce it because it is investing activity. That reduction is already done here. Minus 12,000 we already did. So no need to do it again. Okay, next ledger. This is also closed. Next is bond account. So everything ticked off here also. All right. Check the ledger. Two bank account is there. Two bank means bond has been repaid. Because bond account debit to bank account is the entry. So bank is being credited means cash is going out. So bond is being redeemed means what sort of an activity? Financing activity as an outflow. Check 50,000 is shown under financing activity as an outflow. Yes. Correct? Okay. Check on the credit side. And is there anything? Bank? No. Provision for taxation, I think we already captured. 9,000 we have already captured. Correct, sir? Okay. One hidden adjustment I told is don't forget the interest. Interest received and interest paid. That will all, they will not give it an adjustment, but we still need to know. But in this problem, they are good. They only give an interest expense paid. Okay. Interest paid is what activity, sir? Financing activity. So on 23,000, you should also deduct under financing activity, which we will take it off here. Yes, sir. And also interest received. I think interest received we have already captured here. Oh, no, it's not captured. Always interest received, interest paid, watch out. Do we have any interest received in P&L? Yeah, interest income received, they have shown 6,000. Interest income received is what activity? Interest income received is what activity? Investing activity. Under investing activity, you should show this as plus. Are they added? Yes. If you just check anything is remaining, so this is the total. All these are totals. Anything is remaining to be ticked off or everything ticked off? That means finally cash flow statement should balance. Cash, you check here anything we did or every data was there in the question. Nothing missing. Just you have to take that and prepare some ledgers, put it into, if directly information is given, put it into cash flow statement ka format. Otherwise, put it into ledgers. That's all is cash flow statement. It may be lengthy, but it is very easy. Okay. So if you don't have time in cash flow statement, always prepare the ledger first. Then prepare the final cash flow statement because you will get some step marks. So if you get all this right, you will get a substantial amount of marks like that. Okay, now. All right. So this is done. Next, okay, this is also one popular question. We'll quickly run through this question. Simple question, but has come quite a few times in the previous examination. Jyoti Star Oils has collected following information. Net profit they've given. Sir, whenever you see the word net profit in the question, it is always profit after tax. How much is profit after tax? 25,000. Sir, we want profit after tax or we want profit before tax? We want profit before tax. Here, provision for taxation is there for 5,000. So, profit after tax means tax is already deducted. We want provision for tax or we want tax paid? We want tax paid. So, whatever is a provision for tax, you add back. So, 25,000 plus 5,000 you do. You will get how much? 30,000. Start with that. Or stay profit after tax and then you add back provision for tax 5,000. Like that you present. That is also okay. Fine. Huh? Alright. Next, one by one we need to tick off. Dividend paid. Where it will come, sir? Financing activity as a minus. Check, have they deducted 8353 and financing activity? Yes. This is your financing activity. Okay. No calculations here. Just taking and dumping the data into format. Income tax paid. Income tax paid, where it will come? Operating activity as a last category. 4248 have they deducted under operating activity? This is operating activity. Income tax paid 4248 has been deducted. Alright. Next to loss on sale of asset 40. Book value of asset sold is 185. So book value means carrying amount. Carrying amount of the asset sold is 185. You made a loss of 40. That means you have sold it at a higher than carrying amount or lower than carrying amount. So if you sell higher than carrying amount, obviously you will have a happy scenario, meaning you will end up making some profit. You made a loss here. That means you have not sold it at book value. You have sold it at lesser value. So you have not sold it at 185. You have sold it at 185 minus 40, which is 145. Okay. So sale of asset, what activity? Investing activity. Under investing activity, check, have they taken 145 plus? Yes. But you made a loss on sale, no? Loss on sale would be transferred where? To P&L account. Due to loss, what happens to your P&L? P&L balance will reduce. If P&L balance is reduced, means your operating cash flow also is indirectly reduced. But sale of asset is not operating activity. It's an investing activity. Hence, what we need to do? Add back. Loss on sale, have they added back 45? Somewhere, 40. They've added back. Okay. Yes, guys. Okay, next. This two are over. Depreciation charged to P&L. Depreciation is a non-cash expenditure. What should we do? Add back 20,000. Have they done? Yes. Okay, next. Profit on sale of investment 100. Carrying amount of investment sold is 27,765. You sold investment and you made profit, means you have sold at carrying amount or higher than carrying amount. Higher by how much? 100. So 27,765 plus 100. So sale value will be 27,865. Sale of asset, what activity? Investing activity. Check, 27,865 they have taken under investing activity as plus. Yes. But you sold this investment at profit. Profit is transferred where? P&L account. Due to this, P&L balance has reduced. So your operating cash flow is also reduced. But sale of investment is not operating activity, but it is a investing activity. But operating cash flow has reduced. So what to do? In fact, operating cash flow is reduced or increased. I think I told you for me that time of the day for me. Yeah. So you sold investment at profit means P&L balance has increased. So your operating cash flow has also increased. Okay. But it is not an operating activity. Hence, what do we need to do? Minus. So check minus. Have they done 100? Yes. Next. Interest income received on investment. Interest income received is what activity? Investing activity. So 2506 they should consider as plus under investing activity. But interest income would have gone where? To P&L account. So there's an income. So due to this income, P&L balance has increased. So operating cash flow is also increased. But interest received is not an operating activity, but investing activity. Hence, what do we need to do? Under operating activity, you need to minus 2506. Have they done? Yes. Next. What is next? Interest expense and interest expense paid. Check, sir. Usually interest expense and interest paid amount will be same, but it need not be. Interest expense is how much here? 10,000. What will you transfer to P&L? Interest paid or interest expense? What will you transfer to P&L? Interest expense or interest paid? Interest expense. Because we prepare P&L accounts and all not on cash basis, but on accrual basis. So how much ever is the expense, that expense will be transferred to P&L. How much is the interest expense, sir? 10,000. So interest expense is transferred to P&L. So due to this, P&L balance has reduced. So operating cash flow is also reduced. But interest expense is not an operating activity, but financing activity. Hence, what do we need to do? Add back. Check, have they added back 10,000 in operating activity? Yes. So same thing will be paid up. Usually yes, but in the very next line, what have they told? Interest paid 10,000. 520. So how, sir? Expense is only 10,000. How did you pay 10,000? 520. Sir, it's possible maybe last year interest was outstanding, which is paid in the current year. Maybe last year there was some outstanding interest which is paid in the current year. Hence, interest paid is how much, sir? 10,520. So last year expense will be transferred to this year P&L or last year itself? Last year itself. But are we preparing P&L or cash flow statement? Cash flow statement, we are not bothered whether it relates to next year, last year or current year. Cash flow statement simply considers cash coming in, cash going out. Did cash go out because of this? Yes. How much? 10,520. Interest paid, no? Which activity? Financing activity. 10,520 have they reduced under financing activity? Yes. Okay. Next, tomorrow's agenda also very much simple. 5 or 6 topics. Which topic I'll decide. I'll let you know. Okay. All right. Because it may change based on the time. That's the reason. So you come with an open mind. It's fine. Okay. Next is increase in working capital. I told you. They've not given current assets and current liability. Directly they've given increase in working capital. So increase in working capital means that is possible only when current asset is greater than current liability. So that means indirectly it is increase in current assets. Increase in current assets means what do you do? Minus. So increase in working capital also you should minus. Where? Under working capital changes under operating cash flow. Under operating cash flow have they deducted increase in working capital? Yes. Okay. Next is what, sir? Purchase of fixed asset, investment in joint venture, expenditure on construction work in progress. All these are what? All these are investment activity. So if you have purchased all this means cash will come in or go out? Go out. So all this should be shown as minus. Check have they done that? 14,560, 3,860, 34,720. Expenditure on construction work in progress means you are constructing some building. That building is not fully constructed. It is in progress. That's what they mean by construction work in progress. What is joint venture? You should not be asking. You already have done AS 27. Okay. So investment in joint venture means we have 50% control. We have joint control over another entity. We'll also cover that in AS 27 in case you have any doubts there. So these are considered. Yes. Proceeds from calls and arrears. So calls and arrears is related to share capital. No? So if you have received any money rewarding share capital means what sort of activity is it? It's a financing activity. Have they taken +2? Yeah, because you have received money. So it's a financing activity and inflow. Receipt of grant from for capital projects. So capital projects means your investment or your assets being constructed, etc., etc. That they are referring it to as a capital project. So this is basically your PP, etc., etc. that they're talking about. You have received some grant related to PP. PP is what activity? Financing activity or investing activity? Investing activity. So any grant that you have received for these sort of capital grant will also be considered and under investing cash flow. You have paid the grant or you have received the grant from the government? You have received the grant. So this is where it should show. Under investing activity, you show it as plus. Have they done? Yes. Next to long-term borrowings, proceeds from short-term borrowings. Both are financing activity. Have they reduced both? You check. Under financing activity, both has been proceeds. No, that means you have to reduce or plus. Plus, because you have taken a loan. You have taken a short-term loan and you have taken a long-term loan. When you take a loan, you will have to pay the money or you will receive the money. You will receive the money. Hence, both are inflows, not outflows. Okay. All right. Next is opening cash balance and closing cash balance, and they have given away. These two you take off. These are all totals. That's all. No calculation. Simply taking the data and dumping it into format. But this is popular. Has come quite a few times. Hence, I thought I'll run you through this particular questions. Okay. So with this, here are all the questions we have done. Thank you.